All right, we are getting a lot of reaction from big businesses to the Trump tariffs and the retaliatory tariffs from countries like Canada. For the mining giant Teck Resources, the company's CEO, Jonathan Price, who's in town actually here in Toronto for the big PDAC gathering, he says that tariffs are going to drive inflation through the mining system. He says that ultimately they're going to be focused on sending metal to Asia, not the U.S. He went on to say the U.S. is making decisions without adults in the room. Now, Jonathan Price is going to be joining us here on BNN Bloomberg at 11:40 Eastern Time, so we'll see what he has to say as we watch things unfold. But, you know, one of the things that we've already talked about in a big way with this developing tariff story is, well, now that we have seen Trump deliver on the threat, how long does this tariff war play out for? It's obviously a very important determining factor in where the economy goes and perhaps the stock market as well. David Oliver is a public affairs strategist and founder of Minerva Strategy and often joins us to talk about all things global affairs. How are you piecing this one together now that we have crossed the line in the sand and now everyone's trying to figure out, well, how long we're on the playing field, if you will? Yeah,
and that's exactly it, isn't it? I mean, here we are. We're seeing one of the most extreme short-term tactical plays to drive long-term systemic change. Trump is very clear about what he wants to achieve. He wants to reshore as much manufacturing to, if you like, we had this talk about Fortress North America yesterday as potentially being a trade-off for Canada and Mexico joining a US combined effort to create Fortress North America. Well, I think what we're seeing at the moment is Fortress USA. We're not seeing a sense of a combined North American approach. And so it's trying to drive this long-term systemic change. He made this announcement yesterday, or alluded to the fact that it's definitely going ahead, while he had TSMC making its $100 billion announcement next to him on the side. And then we hear that Honda is potentially thinking of building its next factory in the US. So he will think he's getting the change he wants. But these are extreme measures that are going to have impacts in the U.S. economy. So how long can they last for?
And I think it's worth pointing out, I mean, there's so much tariff talk that it makes your head spin. But even the Commerce Secretary, Howard Lutnick, is on television this morning, and he's complaining about the way the dairy industry is set up in this country, which has been a long-time beef of the United States, but here we are, 25% tariffs come into effect. Now we're waiting for steel and aluminum additional tariffs. Yep. And the Commerce Secretary, right after, the tariffs are implemented, is complaining about dairy tariff rates in Canada. He's concerned about our federal sales tax. Yep. And also asking questions about, why there are car plants basically in Canada. Why can't they just be in the United States? Yep. So that kind of talk would suggest to me that we should be thinking long, or at least be prepared for the long term. Yep. Because that's not the kind of rhetoric you would expect if the Trump administration wanted to get to the deal table quickly.
Yeah, but they haven't really told us what their long-term strategic plan is. And this is, we hear Lutnick. I mean, Lutnick over the weekend was all over the place. He's saying, they're going to be smaller tariffs on some things. They're not going to be as big. At the end of last week, he was saying it won't be 25% across the board. I mean, have we found out yet whether it's going to be the 10% reduced tariff on Albertan oil and gas? I don't know if that's been confirmed yet or not. So, and now he's talking about the dairy industry. So I think a little bit back to your previous interview, is as much of this just sending the strong man tactic signal, and we haven't heard what's going to happen with the EU yet, and this is the US showing what it's going to do to its trading partners, regardless of whether there seems to be actually a strategy in place. And to your point about the mining industry coming on later and talking about the grown-ups in the room, again, the grown-ups in the room would be talking about a strategy, and we can't really see what that is at the moment.
Okay, well, let's talk about Europe for a second, because those markets have been hit quite hard today. I would argue some of that is because they got a lot of auto companies there, and those have been some of the immediate stocks to be impacted. But the fact that Europe is trying to unify around the Ukraine uncertainty at this point, and now is being sent this after being sent, I suppose, a geopolitical message, they are now being sent an economic message because of what's happening with the tariffs directed at Canada and Mexico. What is the collective European next move here?
Well, and that's another part of this story about trying to turn a short-term crank on a very long-term play. We saw all the defence stocks in Europe rocketed yesterday. BAE Systems, Leonardo, the Italian company, the French and German defence manufacturers all went up significantly. And this expectation that we're going to see a huge amount of European defence spending. But the muscle for military industrial production in Europe, as in Canada, has atrophied. And that's not something you can turn around quickly. And so you mentioned the auto sector. The auto sector is significantly joined up between the US and Canada and Mexico. All we're going to see here is huge increased costs for consumers in the US. And it's difficult to see that how quickly, the systemic change that Trump is trying to drive through is going to come through. So back to a European example, we're talking long-term change here that we're not going to see overnight.
Okay, David, thanks very much. A lot of moving parts. David Oliver of Minerva Strategy joining